Welcome to another edition of Cattle Chatter. I'm Susan Littlefield. On the road as we record this, I am at the Nebraska Governor's Economics Summit talking about growing Nebraska. And we know Nebraska had some bids cash-wise that kind of set the banter for a little bit, but unfortunately, out of bed. We're going to talk about the disappointment we've seen in this trade and really the extreme volatility. And as Brad says, not for faint of heart. Brad Kooima joins us, of course, with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's just kick that can down the road a little bit. What is going on? I mean, today we saw the markets do a drop. There was hope and glimmer earlier in the week, but I don't know. It's an interesting week, that's for sure.
Yeah, 100%. Well said, and thanks for having me on. Of course, Susan, I enjoy this a lot. The volatility is off the charts. Yesterday, I took a day off and went down to the Iowa State Fair, and I'm watching like the rest of you guys, I'm watching the markets on my phone, right? And I'm feeling like I'm not even on the roller coaster, and it feels like I'm on a ride, right? And today's volatility was like that. I was saying to the other brokers this morning. I remember when I first started. I'll date myself. I think it was a year into it or something like that. We had the dairy buyout, and I thought, holy smokes! I mean, we went down the limit, which was $1.50, 3 days in a row. We lost $4.50. I mean, we lose $4.50 a hundred now, Susan, while you go get a cup of coffee. The volatility is what it is, and either you adapt or you get run over. It's because of AI, it's because of algorithms, it's because of HFTs, it's because of these chunks of money that are driven and seem to be able to sense where these spaces are in the market, where all of a sudden you sell enough of it, and all of a sudden, shoo, you break $2.5, $3, and then then they catch and they don't. So that's part of the reason why I think it's just because of the nature of the participants in the marketplace now. But I thought today was about a couple of things. One of them was a softening tone in the live cattle cash market. But the other thing, I think that the number one probably chatter was, that was good, huh? Chatter.
That was good. I caught that.
Yeah. Was why would Secretary Rollins be going to the Mexican border tomorrow? Mentioned a week ago, Friday, I guess, or last Friday, this got announced. So some of us have been talking about it for a while, but why would she go there unless she had some important announcement? I don't know what she's going to say. I wish I did. I think that today it would seem that the way the trade acted, that there was conjecture that, well, what if she says, hey, we figured out some new protocol. That means we're going to open this thing right away. And, that seemed to be, feeder cattle futures led on the break, as well as deferred live cattle were the weakest thing up here, which stands to reason. If you think that the border is going to open soon, it makes perfect sense. So I don't know. I my sense would be that the border thing is probably going to open sooner rather than later. I mean, they are pushing and pushing down there in Texas. There's empty grow yards, empty pens, empty 9 straight months of record low placements. I'm just reporting the facts. I'm not saying where my opinion lies on this thing. So we'll see once. What has been the dominant factor in the past on feeder cattle in particular is that cash feeder cattle remain unbelievably strong. And I don't know if that'll change. It didn't change this morning on the video I was watching. It didn't change at the sale barn yesterday at Rushville. So that's we'll see. It can, and if the futures do continue to break here a little bit, that'll change there too. But I suppose the other thing is maybe the cash cattle market was a little bit of a, kind of a slow curveball here today.
I can't complain about seeing $4 cash earlier in the week, like we saw in Nebraska. And like you said, sale barns have got the activity there. So having said that, are packers kind of pulling back on these bids and they're just going to kind of sit and wait and see?
If they can, that's what they're doing. You've got pretty big kill cuts here last week, pretty big kill cuts again this week. There's certainly more than one major packer that's down to 32 hours. That's 4 days a week. Their margins are poor, obviously, and that's what they're trying to do. And there's not enough cattle to go around. Who's kidding who? So there's that. And it seemed like today we were down to basically two players, and when one of them seemed like they got enough cattle bought, then when there's no competition, market changes. Early today, we sold a few cattle up here at 245, and by maybe 11 o'clock or so, I couldn't get it anymore. Where they pulled their bids back to 42, 41, and that some of that strategy. I mean, some of that's gamemanship on their part, and we've all seen it before. So, but and that futures related, right? I mean, the board breaks, and it's all part of the psychology. So we'll see what's if the producer, the feedlot, stands firm like he has for months and months and months. And cash firms back up here on a Friday like it's done how many times, then the market will probably respond favorably. But I think a lot of it's going to be hinging on if there's any news at all, if that comes out of that Secretary of Ag Rollins' speech. Yeah.
So speaking of Mexico and cattle and the Texas cattlemen that do all that feeding, what type of stress do you see that playing then on the corn market? Because there's no cattle to feed that corn to right now, no cattle to eat the corn. It's just like this vicious cycle it's in.
Well, 101 to your question, but the 101 answer to the corn thing is, and you've got a great question here. So corn usage is almost equally divided between industrial, which is making ethanol out of it, and feed. They banter back and forth for which is what's in first place of the demand. The third thing is exports. Okay, so those are the three big deals, right, for corn demand. And let's dig a little deeper into the feed residual column of that deal. The cattle, you can add every other component of the feeding industry. You add them all up: hogs, poultry, turkeys, catfish, goats. I don't care. Add it all up, and that together is still less than what cattle eat. Cattle are a huge driver of feed usage. Well, year-to-date slaughter is what, 6.5% less? I mean, it's a real number, Now, to the two other old timers that listen to your show, the old story was always right. Cheap feed makes cheap cattle. And ultimately, that's what happens, right? Because we decide, well, let's just make them bigger because it doesn't cost me $2.45 to put gain on, right? Feeder cattle are high anyway. All sound familiar? So that's all part of the market. But is that bearish today? Maybe not. Is that bearish someday? Yes. It always has been before. So yeah, just another reason to have heartburn if you're a corn guy, right? Now, I think ethanol thing is running hot and heavy, but maybe at capacity. So maybe that third component, maybe we can hear some good news about some compromise in the tariff situation, some sure knowledge that we still have Mexico and still have China as trade partners for the corn. That might change it a little bit. But right now, we're just trying to find out just how low we got to go with this great big crop we're sitting on.
All right. Question for you from a listener. Wants to know dairy beef. Is that, or could that be just a smidge golden ticket, partial saving grace for these feedlot issues? Because we don't have the beef cattle to move into these feedlots.
Tremendously good question. Pin this one to the wall. In 2 years from now, you and I will say, you remember when we talked about that deal and I told you this was going to be the end of right now, we're compromised because of the inability to get cattle out of Mexico. I don't know if compromise is the right word, but it's a dramatic fundamental. Okay, like last year we've got 1.1 million cattle out of there. I mean, this is a number. Okay, now to that listener's question, because I've done quite a bit of thinking about this. First of all, cows always had bull calves and heifer calves. Okay. I mean, so some of this component is not quite with the drama that one might think. I mean, we're not creating a whole nother category necessarily because we always had Holstein bull calves before or whatever, Jersey, whatever. Now, having said that, I also know there's been plenty of times when those cattle have little or no value. Got a very good friend of mine that just retired from the semen business where, I remember how popular that was for a while. You'd breed to get a a heifer. So you'd have a heifer to bring back into your herd. Those days are gone. Now it's the opposite of that, right? So it is a factor. And I think so much, I talked to a huge dairy Monday, and that's become a bigger component to their whole dairy business of making sure they have the right beef cross on the dairy stuff that they have, because they can, getting $1,200, $1,300, $1,400 for a day old calf. Of course, that's going to be a big deal to them. So it's going to, when we level it out and start to get Mexico back in the mix, then you're going to have that chunk of that beef cow. And then what bothers me about it is that beef on dairy plays right into the formula play, plays right into the vertical integration. I mean, because you literally can almost schedule that beef on dairy cross on day one, right? I mean, they're going to feed it 400 days. I don't know. You tell me. Somebody will go, well, that ain't quite right. Whatever. They're going to feed it.
Pretty darn close though, because that's what we have in our feedlot. So yeah.
Yeah. Okay. And so then we can just figure out when that is. We can schedule it. And we can. It's really, it's been the missing component for why we don't have it, like why the cattle aren't like the hogs yet, where the hog industry, where they can control it right from the sow all the way to the when it's a pork chop, right? Well, you got ranches in Alabama and Montana and Nebraska, and one guy's got 10 cows, one guy's got 10,000 cows, and then they background or they don't, or they make yearlings. It's just a whole, there's no way to control that factory from day one until now with that deal. So yeah, maybe I'll retire by then, but yeah, I'm worried that that's going to change at least the landscape for cash cattle, at least in some segments. Yeah, for sure. So,
all right. Best way for folks to get a hold of you. Thank you.
Tell him to be quiet and give him his phone number, 712-722-0023. Give us a call, kkvtrading.com. You can learn a little bit more about us too.
All right. Thanks so much. Brad Kooima joining us once again for this week's Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.